All right, welcome everyone. This is Bob Maurer. It is Friday, the 20th of June, around about 2:30 my time. Figure we'll do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. On that note, a number of them hit their targets or timed out. So really we're just down to a couple. So we'll see how that all played out. Dialing into the portal here, you're going to see the most current PDF version just uploaded a bit ago. This will be going into the next week of 622 on Sunday. And this is what we're working with here. So top row, 359, bull spread in cattle. I have adjusted the exit prices based on walking this forward. It's only got about a week or so left. And that changed the approximate gains. Bear that in mind. And then for the next row here, the bear spread in soybeans, that one were flat. It timed out. See how that one finished up. Same for the rice here, number 361. We're flat. Actually, this one hit its target. So out of that one. And then we got 362, the bull spread in wheat, which we're still trying to get into. We'll see how that plays out. I like it still, though, so that's why I'm keeping it on. And then number 363 is a bear spread in the frozen concentrated OJ. And that one also is now flat. Actually, it reached all the way to the second objective, T2. All right, so we'll look at all those. So let's take them one by one, starting with the cattle. All right, so this is strategy 359, bull spread cattle. We were looking to buy a pullback, and we got that. So entries level 1, 2, and 3 have all been filled. And now we just need this market to rotate back in the direction of the trend. Trend clearly since about mid-April has been higher, so we're getting that pullback, and now we need to see this thing hold and then rotate back up. Like I said, it ends on June 30, so we've got just 8 calendar days left, really about 5 or 6 trading days, so this thing will have to act pretty quickly. Did have an attempt at a pop up today where it did rally up to 110, but then closed right near its lows down here at 77. So it's going to be interesting to see how this thing opens up come Monday. Based on the close, you would expect a bit lower. So we'll see how things handle when it gets down to this swing low made 2 days ago, 2 trading days ago, that is. Down at 62. Again, it's settled at 77 ish today. So we just need this thing to hold in here and then rotate back up pretty quickly. And as you can see, it's not impossible for this thing to rally pretty significantly in a short period of time. We've seen it already. Now, I did mention that I revised the exits. So this is what we're doing. So as of today, we are taking target 1 from 175 and lower it down to 147, right about here. So not too much higher than the benchmark actually, which is our first entry level. So that is going to go down to 147. Let me just clean it up so we get the visual here. Okay, and then the second exit is going to be where the first exit was. So target 2 is not going to be down. They're going to be at 175. Let's do this actually. Let's go down here with this. And then let's take this up to 175. Sorry about all the moving around things here, but I'm just trying to get a solid visual on the strategy. Okay, done. So that's it. So we canceled the original targets 1 and 2, and now we've got revised targets 1 and 2, 147 and 175. So I've reflected the math differential on the PDF, not here quite yet, but on the PDF I did. So looking for less of a rally at the moment. That's just me walking it forward and seeing what the potential is for this particular trade. I still think we need to keep the stop where it's at. I wish we could tighten it, but I think we need to keep it where it's at so that we don't get stopped out and then the market rallies in our favor. So just me looking at how things have traded before to see how much room we need to still give it. So that's where we're at. So net change to the strategy. Okay, revised the targets, and all three levels are filled. I believe the average price is about 115 if you did all three. And that would mean that you're sitting with some level of unrealized loss. Ditto for the more conservative entry level three traders in this one only, still be sitting with some level of modest realized loss. So that's where we're at. Revise the targets. We just need this thing next week to show a decent rally. Walking it forward, I do. The data, in my opinion, suggests that we should go higher next week. So that's a good thing, maybe in anticipation of the grilling season. Yet another grilling holiday, that is, with the 4th of July coming up, adding to some enthusiasm on the bid side. So we'll see how that plays out. Okay, so that's strategy number 359. Currently sitting with some level of unrealized loss, and there has been a change to the targets. The stop stays the same. We'll see how that plays out. And then the other one that we're still is ongoing is wheat. So I'm going to jump to that one. This is number 362. Clearly, this market's in a nice solid range here. It's pretty easy to see, anywhere from about, say, negative 39 cents to roughly negative 45. About a nickel range. That's a $250 move. Market got up towards that high end of the range just last trading day, which was Wednesday, and faltered, and now we're pushing down. But walking it forward, even with only just a short period of time left, the strategy uh, still suggests higher. Okay, which means that our bids down here at 42, 43, and negative 44 and a half could be filled and then have a little bounce back to the upside, even though it's a short window. If that turns you off because you like more time involved after you get into a trade, then feel free to look this one off and not do it. But that's where we're at for right now. I just want to keep it where it's at. So that's strategy number 362. No fill and no change as of yet. So now let's talk about the trades that are off the board. So this is strategy number 360. It is our bear spread in soybeans, the NOVSEP. And I know the white line here is on the 22nd, but obviously that falls on Sunday. So I liquidated today with either somewhere in the neck of the woods of either a modest loss to maybe about break even. Most of the day it was trading around negative 6.75 to negative 7. And maybe for those who were able to get filled the negative 6, because we did touch negative 6 here on the 13th of June, you might have ended up with some level of realized gain on this one. So I think for the most part, to be fair, probably book a very modest realized loss on this. It just kind of stayed buoyant, didn't really break. We had one day out of the gate there that touched our negative 9, but pretty much for the last 7 or 8 trading days or so, it's been more sideways than anything else. So not a whole lot happened in this window. And again, it's supposed to end on the 22nd. So maybe some of you chose to see what will happen come Monday. But I didn't choose to do that this time and ended up with, like I said, a bit of probably a modest realized loss on the soybean. So that's 360 flat, timed out. Then we have the rice spread number 361. I did mention at the onset that this was a relatively illiquid market, and that might have caused somebody to rethink it. But nonetheless, if you had done it, then entry level 1 was filled. Very first day, and the third day of this window, and then it touched it on the about 5th day or so. And then it broke down pretty good over the last few days, breaking through that negative 17.5. So modest gainer, no doubt about that. The Level 1 would have been about $100 gainer. So not a big deal, but nonetheless still positive, which is a good thing. So this one basically did what it was supposed to do, hit our first target. If anybody's still hanging in there looking for target 2, more power to you. I hope it does it. All right, so that is strategy number 361. This one we're flat. Went off the board with some level of realized gain, if you did it. And then last but not least, the other spread that I mentioned on the onset tends to be a little illiquid. So again, maybe some chose not to do it. Was this OJ? So it's the bear spread in OJ. It was the long nose short September. And this one got filled on levels 1 and 2, not level 3. So the more conservative entry level type traders did not get on board. It was the more aggressive average in traders getting in level 1 and 2. And then it pretty much broke consistently for 4 or 5 trading days in a row, pushing on through targets 1 and 2. So this one did what it was supposed to do in pretty short fashion. Not a big window of opportunity here with only 12 calendar days, and obviously less than that in terms of trading days, but it performed nicely. So that's strategy number 363, again flat, and ended up with some level of realized gain. All right, the 3 of the 5 that we had been working on are now flat. The wheat is still in play, although we haven't gotten in yet, but no change to that strategy and no fill as of yet. And for the cattle, all 3 levels are filled, and the market ended up on its low today, and probably ended up on its low today, and we'll see how this thing trades come Monday. And I did tighten up those targets. So that's where we are at. If you guys have any questions, comments, anything of interest, feel free to reach out to me. Hope you have a nice weekend planned. I am going to leave it there, and thanks so much for watching.